starting now.
Good morning, traders. This is Tony D from easyMarkets in Sydney. TraderTalk. We've got a little bit of a reversal situation in the markets. We've got US dollar pushing back against multiple pairs. We've got some profit taking in oil that got quite aggressive overnight. You see the trade we did yesterday selling at 50. Fortunately, take profit did not get hit at the level that we put in, just a little bit above the market found bid support. So closing out that trade at this point, because the main reason for the trade was to get a correction in the market. So we've got that. In terms of the euro, the story in the backdrop here is that German bonds had a bit of a reversal in the yields last night. Now it was actually a global phenomenon. Yields were falling around the world, but the German yields fell first and fastest, and so the market was caught a little bit off guard. It's potentially a new story there. Yeah, perhaps the market's getting ahead of itself in terms of the ECB tapering timeline and the effect it's going to have on European yields. And that's, you remember, when you're trading Forex, it's very important to look at the bond market to see what they're pricing in for future rate hikes from each of the central banks. And the thing you want to be watching is the difference between the US and the German 10-year. All right, so that's the thing which was moving last night, and you saw the pullback in the euro on the back of that. You saw broad-based reversals in all the commodity currencies. So with oil lower, you saw Canadian dollar had a sharp reversal back above 125. Still lower than the previous reversal highs though. So if we get above that, then more stops will be hit. You saw the Aussie dollar come under pressure after the RBA meeting was jawboning as expected. 3 or 4 mentions to in the report, in the statement about the Australian dollar, but the language wasn't the official jawboning language. So the market, more than the RBA, it was more the US dollar pushback and commodities having a little bit of correction here. The dairy prices overnight had an auction and that hit the Kiwi dollar. And with the Kiwi dollar also this morning, you got employment numbers coming a lot lower than expected. These quarterly numbers from New Zealand were badly missed actually. Came in at minus 0.2% change quarter on quarter employment change versus 0.7 forecast. So that leaves the RBNZ in quite a difficult scenario. They've got a very strong Kiwi dollar, and they've got a bit of a stagnation in their economy, in their employment area, and they've got very low inflation. So the trade that makes a lot of sense in this environment is long Aussie Kiwi. Iron ore is outperforming dairy. You can see technically as well, it was in a nice uptrend, had a bit of a pullback, tested 106, and has resumed its uptrend, took out the previous highs there. So in terms of upside here, if the market gets a bit more dovish there on the RBNZ, then you're looking at a potential widening of the outlooks there from the RBNZ and RBA, and that can support a major move from these levels, because usually the Aussie Kiwi trades between, say, 110 and 130, and at 105 we're actually at the lower end of where we trade with this pair. So the potential for correction and just a more substantial move higher is there. If you have any questions or you want to talk to a dealer, please come through to Sydney Dealing Room, 1-800-176-935. Or you can, if you're outside Australia, you can use the sign up link below in the YouTube channel. Thanks guys.